Good morning, everybody. Hey, welcome to Thursday. It is June 16th. And yeah, the Fed came out with their announcement yesterday. We'll talk about that and more when Dave joins us here in just a few moments. Also, yesterday seemed like a nice bounce, given that interest rates went up that 0.75%. We'll discuss that too when Dave joins us and how it's affecting today's market, because definitely not a follow through. Hey, with that, remember, there's only one thing that we can control, because obviously we can't control what happens in the marketplace. And so the one thing we can control, though, that you can control, we all can control, is how much risk we have in our current portfolio. The issue becomes, do you know how much risk you have? And do you know how much risk you should have in your portfolio? Give us a call at 863-382-0037 to schedule your core retirement design phone consultation, where we'll make sure you're on the right path to the retirement you always dreamed of. And with that, we got Dave coming up next.
Cracker, a little help from the original Dobie Gray on that as well. It's 18 here before 9. Time to check in on your money, and I always tell friends the only chance I get all week to use what education I got in the world. So let's see what Wall Street's doing to your money this morning. Good afternoon. Yesterday morning ain't quite as bright. Let's check in with Phillip Statler from Statler Financial Services and get his take on it. Phillip, good morning. How are you?
Hey, good morning, Dave. I'm doing well today. It is, man, I was excited about yesterday. We interest rates went up, the market went up. It was just a great day.
Yeah, I was actually kind of optimistic because it wasn't what I expected. Powell announced the 0.75% interest rate increase, which, okay, fine, we were expecting 75 basis points, but I expected the market to, flat or down after that, and all of a sudden after that, it skyrocketed. Dow went up 304 points. The S&P was up by 55. NASDAQ was up 2.5% at 271. I mean, in the context of all we've lost over the last 6 days, it's still a drop in the bucket, but it was completely the opposite reaction I expected. Then we got to overnight, and evidently everybody started reading the tea leaves a little more detailed, huh?
I'm guessing that's what happened, Dave, because we are falling off the rails again this morning and giving back every bit of what we got yesterday and then some. So.
Oh, yeah, it was terrible. It's fleshing out for folks. Basically, yes, it was a 0.75% rate increase on the reference rate from the Fed, and that was what people expected, which is why we got the certainty rally, for lack of a better term, yesterday. But the other things in the Fed statement, and this might be what's really ruining everybody's humor, the Fed statement, number one, there was no reference to expectations that the labor market would remain strong. Bank says it's, quote, strongly committed to bring its inflation back down to a 2% goal. And I kind of looked at this and I saw, we're expecting something really crappy to happen, because the Fed's forecasts are saying they plan to cut interest rates again in 2024, which says we're planning on some reason where we're going to have to stimulate things because things are going to get really crummy in a couple of years. Is that kind of your take on it?
Yeah, I didn't get a chance to really scrape through the report yesterday, but what stuck out to me was that the comment that Powell made is that we could raise interest rates again in July, another 0.75%.
The beatings will continue until morale improves.
Put on a happy face, right? Because it is nothing to be happy about with what we see. Now, I guess eventually, when inflation's under control, we will all be happy and excited about that. But the pain to get there is like you said, the beatings will continue. So that's what it feels like some days.
Oh, yeah. And the thing is, like you said, we'll be happy when it's over. But the bottom line is it's just an economic truism. When inflation gets out of control, the only cure for it is a recession. And what we're hoping for is a soft landing one where we don't really have too much pain in the process. That'll get inflation under control, and a soft landing, mild recession will be all right. You got at least one analyst that thinks that's what we're looking at here.
Well, I did. I saw one headline that said a shallow recession is on the way. a strategist warned. So I'm glad somebody's seeing a shallow recession, because that may be considered good news.
Well, yeah, I mean, okay, fine. If you define a shallow recession as being unemployment eking its way up to 4.1, 4.2%, and I mean, it's not pleasant for people that actually are the fallout from it, but nevertheless, we've got an abnormally low employment rate right now. If our shallow recession goes up to what used to be called a normal unemployment rate, and the economy ends up dipping down to that and then starts booming again, we'll be perfectly happy. So yeah, a shallow recession is what we're hoping for, because we need at least a little one in order to tame the inflation. Now the question is, let's hope it's as painless as humanly possible.
Oh, that's right. That's definitely what we want to see, because nobody likes pain, right? And there's sometimes, what's that adage? It takes pain to make gain. So no gain without pain. So that's what we're going through right now. And when it settles down, just like back in the last bear market in 2008, we saw it was painful, but man, did we have a 10, 12-year run from there that was pretty incredible.
Yep, I've been referring to it as castor oil. It's something you don't like to take, but it's going to help in the end. Now we get into the economic reports for the morning, and the big leading story in the economic reports were the construction industry, and we sure don't need to hear this junk after yesterday's debacle with the interest rate reaction. Housing starts. They expected housing starts to slow down a little bit in May. They expected them to be down 2.5%. Housing starts in May down 14.4% nationally. As many other industries as construction affects, that is about the worst news I can imagine following an interest rate hike.
Yeah, definitely. I mean, housing, real estate, those are important industries right now, because that affects a lot of folks. And so we continue to watch that. I mean, this is, a big deal, because it shows that there is the interest rate rising in the mortgage market is having an effect on housing. And so we know that's part of the process, is right, to drive up interest rates, slow down the economy. And this is just an indication that the housing market is going to start slowing down, and is slowing down.
They may need to lower interest rates before 2024 at this rate.
I wouldn't hold my breath on that right now.
No, I'm not going to hold my breath. I thought you were there. I thought you were, though, for a second there. You got the building permit numbers. The housing starts are what's actually happening. Building permits are what people are planning on doing, and that number wasn't as bad as starts, but it still wasn't exactly a bowl of cherries, was it?
No, it wasn't. If you compare it to the last month, it was a little bit better than last month. However, the expectation was 1.78 million, which is almost 100,000 more than what the previous month was, but it didn't come in there. It missed that. It came in at 1.7 million. And so still a smidge of an increase from where it was last month. And again, that's an indication of people's process to get to the housing starts. You got to get the permits pulled first before you can start the construction. But a lot of times there's a breakdown in between, Dave, and that may be what we're seeing here, is that the permits get pulled and then they rerun the cost analysis, and projects get put on hold because now prices have gone up. And so sometimes there's a hole put on it between the permit being issued and the actual construction project starting.
Absolutely, and that's why we end up with that big decline in the actual starts number down the line. The other economic report that came out this morning of import was the first-time unemployment claims, and that still remains abnormally low. I mean, it was more than the economists expected. They expected like 217,000. We got 229,000 first-time unemployment claims. We're still at an abnormally low number for a normal week, so I'm still tempted to blow that off for the moment. There really is an indication from that number alone, although the last, I think 3 or 4 weeks in a row, we've been slightly more than expected every time, so there's a bit of a trend beginning to show.
Well, yeah, and they revised the last week's up just a tad, not much. The other number that we didn't talk about this before we went on the air, is the Philly Fed manufacturing index came out. And to me, it was a disappointment. It was expected to come out at 4.8% or 4.8, whatever that number is. And it actually ended up a negative 3.3. So, it went definitely the wrong direction.
Yeah, and that, absolutely the wrong direction. Again, we always remind people that those Federal Reserve indexes that they put out for business activity, it's the absolute number that moves, because the formula is different for each individual Federal Reserve branch. So it's just which direction it's going. Wrong direction, equal bad news. Just to make things even more interesting, if folks were thinking, oh, what the heck, I'll put my money over in Europe, the Bank of England this morning just raised their reference interest rates for the 5th time since the first of the year. So you can run, but you can't hide, right?
That's right. And talking about interest rates, we still have an inversion between the 5-year and between the 5 and the 10, and right now between the 5 and the 30.
I noticed that, yeah.
The 5 and the 30 just it keeps going in between, but it's back being inverted. Now the 5 and the 10, it's been inverted all morning. And so we continue to watch those numbers, which is a indication for a lot of folks that we're headed towards that recession.
Yeah, while we were enduring the inversions between the 5 and the 10, I was always reading commentaries saying, don't worry about it until the 5 and the 30 get reversed. Hello.
Yeah, we're there.
They're happening now. Not many reports were at the end of earnings season, obviously, a few stragglers, and there's a company that reported that you know something about, but I don't. That's pretty much it for quarterly reports, huh?
Yeah, and I found one more, but Jabil, they came out. They're an electronics manufacturing service solution. I know they got a big office over in Tampa. Used to have a friend that worked over there, and so they reported their earnings. They beat on top and bottom line. They for this last quarter, they beat by 10 cents a share. They continue to see solid demand from their customers, which is always good. I think they're getting caught up in just the downward movement of the market today. They're down almost 1% this morning.
That ain't good. You said you found one more we didn't expect?
I did find one more. It's called Commercial Metals. So they're a metal products manufacturer. They beat by about 59 cents a share, came in at $2.61 a share. And then the revenue top forecast as well. They anticipated upbeat financial performance for the current quarter as well. I guess they still see some strong construction that uses their metals for construction. So they're trading up 1.7% this morning.
Cool. Good to have some good news to be had. Resetting the table, it was an up day yesterday at the end after the Fed announcement. Then we started reading the meat of it, and I get the feeling we don't really like it all that much. 45 minutes before the open, what's happening?
It's a lot of red ink, Dave. We've got the Dow Jones 30 down $506 right now. So that's down 1.65%. The S&P 500 is down almost 2%. And the NASDAQ 100 is down almost 2.25%. So nothing pretty this morning on that side of the coin. Looking over on the commodity side, we've got silver and gold both rebounding. Silver's up 0.8%. Gold's up 0.7%. And then crude oil, it is recovering some this morning, Dave. It was down when I first looked at it, it was down to a little over 112 a barrel. Now it's down only 0.6. It's at 114.62. But hey, I'll take that any day compared to the 120 something we've been having.
No, yeah, those are futures prices, which kind of indicates an expectation of a slowing economy. So the reason why they went down, I'm not necessarily in love with. Overseas markets, we were mostly off on the Asian rim, uniformly off, and sometimes substantially over in Europe right now, where Asian rim was partially off. European markets are off by as much as 2.5% midway through their day. Stabilizing and avoiding the risk that's going to happen over the next few weeks and few months and maybe years, that's something that's important if you're looking at retirement anytime in the next 10 years. Phillip, how do I find you to insulate myself from this mess?
Devin, give us a call at 863-382-0037. And check out our website at statlerfinancial.com. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And one more time to tie the ribbons on the week tomorrow morning, same time on Light. Phillip, thank you so much. You have a good day.
All right, you too.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. Hope things are going well in your world. Hope you'll join us again tomorrow morning, same time, same place. Until then, have a great day.